how long have you been on the radio now? How long have you been doing this show?
I think it's been 8 years, I think.
8 years?
I don't know, 7, 8 years, something like that.
Well, Rebecca listens because Rebecca sent in an email to our inbox. It says, Brian, after listening to your show for the past 2 years, I have learned that there are options out there other than just selling my business and paying a ton in tax. I inherited the business from my folks and not sure I want to continue to run it. It is a pizzeria with great real estate. My CPA keeps telling me to spend more money on equipment and such to save money in taxes. I'm not sure that's the best advice. Can you give me some help?
Wow. There's a lot to unpack there. So I heard she inherited the
business from her folks.
Right.
Yeah. That's a pizza joint, I guess.
So, yeah, I mean, if she inherited it, they passed, she inherited it, and there's a step up in cost basis on the real estate, but the business is probably worth something too, right? So there's cash flow from the pizzeria, right?
Yeah.
And
well, I guess it just says great real estate.
Right. So yeah, I mean, she wouldn't owe a lot of tax, assuming that it wasn't like the property wasn't in like an irrevocable trust that doesn't get a step up in cost basis. Assuming she gets that step up for, let's say they died. She didn't say when they passed, right?
Nope.
But let's say it was last.
Actually, I'm not sure she said they passed. It just says I inherited.
Well, inherited means you.
Oh, is that?
Well, I mean,
that's pass it on to her?
That's typically, I mean, gifting it while they're alive is different.
Yeah, no, I get it.
But
yeah.
I don't know.
It doesn't say when they pass.
The point is that if, let's say, they passed away in the last year, yeah, there's a little bit of maybe growth in that value of the property. Most of it goes away because there's a step up in cost basis. But, the biggest issue, she said something about what'd she say, her CPA?
It says, my CPA is telling me to spend more money on equipment and such to save money in taxes.
Right.
Not sure this is the best advice right now.
Well, that or 401k. I mean, that was my story when I started, my own business as a financial advisor. And this is going back almost 20, it was 20 years ago, over 20 years ago. And, at the beginning, you don't make any money. I was losing money because that's how business works, right? You make gross something, but you got all these expenses in the beginning. And then it was like the second or third year, I'm going, wow, I'm actually making good money. This is great. But the taxes, I'm like, this is horrible. So I go to CPA, right? And they say, what? You depreciate it. You can do this, buy a car, and you depreciate it. You can, it was stuff that I already knew, but I was waiting for something to come across, right? Some kind of systemized way to explain. So what we do is we go through the software and we say, okay, look, let's say, what was her name? Rebecca. Let's say she's paying a lot of self-employment tax. I don't know. And she's elect to be taxed as an S corporation, right? To help minimize the FICA tax, right? And pay yourself a small salary that is reasonable compensation. And then the rest is dividend, right? And you can save up to 15.6 on that. We just had a client in that basically he was self-employed and he's like, yeah, these taxes are awful. I'm like, yeah, but you're probably paying about $11,000 too much every single year. And so we elected him to be an LLC taxes, an S corp, paid him a salary. Even when you include all our fees and everything, he's still saving thousands and thousands of dollars, right? So that's a restructure compensation thing. There's a management company. If she's making a lot of money, you could do a C corp, which basically is a management company to retain the earnings. So there's some tax savings there. If they got children that are kids, they can work in the business. Your kids that are making 10 grand, 12 grand or less. I mean, you're basically not paying any tax, right? They could use that for school. They can fund a Roth IRA.
Oh yeah.
They can, if it depends on what type of income she has. She didn't really go into that, right?
Nope.
But if it's a very successful business, you can adopt an accountable expense plan, 14-day home rental rule or Augusta rule, which is IRC section 280 AG, which is what you know 280 AG.
I do. Like the back of my hand. Yeah. But it's like a nursery rhyme. I just can't forget it.
Exactly. But it lets you rent your residence to your business tax. This one is blown away. I don't understand why a lot of CPAs don't implement this. But it has to be under certain entities, right? It can't be a sole proprietor. So it can be an S corp, C corp, out of partnership. But it's basically in the IRS code, but you have to do it right, and you have to set it up right. So, yeah, there's the 401k savings. If you're making a lot of money, you could do a defined benefit plan, like a cash balance plan. You can contribute up to 265 grand a year into it.
Oh, wow.
Yeah, that really reduces your income pretty quick, right? If you're making, like we had an attorney coming in who's making $1 million a year. There's so many things you could be doing right now. So there's a lot of things that you could do as a business owner if you're just getting the spend more money, which is depreciation, is what the CPA is recommending. Like,
Yeah.
buy new equipment.
Yeah. What if it's equipment she doesn't even need?
Right.
Yeah.
Well, the old equipment's working. I got to spend $100,000 on these new pizza ovens or new whatever, but my tax savings really, when it flows back to you, is $30,000. Did you need the $100,000 piece of equipment? If it was working before, it might have a life of, another 10, 15 years. Don't just go buy new equipment just to save on. You're not saving. You just spent 100 to save 30.
Right.
That's not good math.
Right.
CPA.
I do appreciate that Rebecca's listening, because that was her first line. After listening to your show for the past 2 years, I've learned that there are options other than just selling the business and paying a ton in tax. So she's clearly been listening, and you've given several different options. Rebecca, my advice would be to call, get some help. Integrity Financial Planning. Here's the number, 866-2-PLAN-4, 866-TO-PLAN and the number 4, or you can find us online at retirementplannow.com.